Good morning. I'm John Ellsworth, founder of Success Strategies Incorporated and the creator of the Success Strategies Advantage, and I want to welcome you to today's presentation. This is entitled Rome Wasn't Built in a Day. That's an old saying I'm sure you've heard a number of times in your life, as I have as well. It's a very old saying, and but I think I just came up with that title for this article, this blog, and this video because recently I've been hearing a couple bankers and some vendors who are basically saying, "Gee, milk prices are up so much. Why are dairymen not catching up faster on their payables?" Frankly, I was kind of shocked to hear this question, but took it into consideration and I tried to explain to them that we should consider several things. From 2015 to 2018, that's 4 entire years, milk prices were abysmal at best. They were just horrid and way below break even levels for most people. So I thought to myself, really? You're asking this question, why aren't they catching up on payables? And then I went on to consider that until around mid 2019, we had better milk prices, but frankly they were like break even prices for a lot of people. And meanwhile, in this 4.5 year period, the cost of almost every item was up. And I can speak for this by looking at my clients' profit and losses and cash flow analysis. And I can also attribute this I can look at this through my own personal experience in my own business. I mean, for me, fuel prices, and a lot of people, fuel prices are up like 30% in the last couple of years. In my case, the flights that I take every month to go see clients are up probably 50% in the last 2 years. It's incredible how much things have gone up. And you folks are faced as producers, maybe we all are faced with this, the fact that labor the last 3 years has just gone out of sight in terms of cost and even less available than ever we've seen. We have the lowest unemployment rate in this country we've perhaps ever had, or at least in the last 50 years. And all of these things make for what I call a nasty combination. First of all, we have lower milk prices, we have higher costs, as I just explained. And then, if you think about it, we have interest rates that are about 2% higher than they were 2 years ago. And we've been paying that 2% additional interest, or I haven't been, the clients have been, at additional 2% interest on higher balances, which are a direct result of the fact that they've been losing money or not cash flowing as well as they'd like to. To which I would say, yuck, this is awful. But hopefully, this combination of events, this explanation, will help clarify for some people why payables aren't necessarily getting paid down or caught up quite as quickly as we'd like. I don't know of any dairyman that wouldn't like to have his accounts payable close to zero again, but I think it's a little impractical to think that it's going to happen in 6 to 7 months of 2019. Ironically, one of the bankers that asked this question had already decreased the amount on the revolving line of credit that this client could borrow back. And that did two things. It improved the loan to value from the bank's perspective, which is a good thing, made the loan to value lower. But the reality is it helped to tighten the cash flow even further. And that was kind of a setback. So I'll leave you with these thoughts. What to do? What can we do? I think there are 4 or 5 things you can think about. Number one, realize that catching up cannot happen overnight. When we spent 4.5 years getting behind, if you're behind on your payables, accept the fact that so are a lot of other people. That doesn't mean we won't try to catch up, but you can only do as much as your cash flow allows. Unless you get a total refinance, and for that you need a willing lender. And if you have found those two opportunities, and I have for several clients this year, 2019, but without a refinance, which requires a more willing lender who's willing to work with someone, that's probably not going to happen. And if you find those, I would suggest that you've been truly blessed this year. So, point number 2, chip away at the accounts payable. I kind of like the concept of looking at them like credit card debt. Pay the small ones off first, get rid of them. And the reason is The dollars don't necessarily matter. They're the same whether they're on big ones or small ones, but you will sense that you're building some progress and you'll build some momentum. And psychologically, as you go through this process of getting caught up on payables, that can be pretty powerful. It can have a very powerful effect on your thinking and your progress. So I would encourage you to do that. Chip away at some of the smaller ones. Just get them off the payables completely. Point number 3, this is a real concern that I have when I hear somebody say, I can't pay anything off. And my point is never, ever, ever, that's never say I can't pay anything off for several reasons. Number 1, it's not true. And number 2, your mind will start to think that this is a fact. And if you believe this, it'll be a real setback for you, and you will tend to go month to month saying, I can't pay anything off, so I'll just keep going. And trust me, that's a blind alley you do not want to go down. So never say that you can't pay anything off. You can. And if that goes back to point number 2 of paying off some of the smaller ones, I think there's some benefit in doing that, money-wise and psychologically, to build your momentum in this process. Number 4, I would highly recommend that you review all your payables. As you go forward, are all these things needed? Or to the extent that you've had them, that you've used them in the past, is it possible that you could be just as successful using slightly less of some things you're getting a payable or a bill for? And I would just say, consider that. I'm not trying to cut anybody out. I'm not saying no vendor is important. They're all equally important. But my point is, can you do it less? And my reason for suggesting that is that 2 years ago, in my office and travel expenses, we did some real in-depth analysis of what we were spending money on. And over the last 2 years, we've been able to cut our costs of travel and office expenditures by about 15%. And that's been big. But the reason we did it is because what I'm suggesting you do some planning and do some increased monitoring. Number 5, and this is our final point, talk with other producers. Spend some time with other producers. There are 2 reasons for this. Number 1, from them you may gain some really positive ideas, and that would just be fantastic. And you know what? You may give them some ideas, and that's my second benefit to doing that, talking with other producers. So to conclude, I would ask you to think about this question. What action will you take? Think about that question. In response to try and get your payables caught up, what action will you take? There are some things you can do. So think through that question and spend some time on that. What action will you take? Again, I'm John Ellsworth with Success Strategies. I'm the founder of Success Strategies Incorporated and the creator of the Success Strategies Advantage. And I would encourage you to take a look on our website, which is listed behind me at www.success-strategies.com. Take a look at the new Success Strategies Business Navigator program. You may find this very beneficial. I would encourage you to take a look at it. And I thank you for listening today. Thank you.